Welcome to the ALX Show, your premier source for DFW real estate data and insights. Let's get to it. Hello, and welcome back to another episode of the ALX Show. We took a brief hiatus around winter, Christmas, holidays, all of that, and made some updates. We talked a lot about the products, services, and the kind of people that ALX and Silverton is offering going forward into this year in 2025, given the markets, given what is happening, locally and within Texas broadly. And so I would love to hear from Patrick and Josh, who we typically have on the show. Welcome back. Thanks, guys, for being back. I would love to hear from you guys. What have you guys been talking about, thinking about this week, the last few weeks? You guys have a great newsletter where you're talking about a lot of market insights. One of them, I think this was the most recent one, was on DOGE, the Department of Government Efficiency, and how that affects things that you guys are thinking about and your perspectives. So talk to me, Josh. I'll start with you. A little bit about what you and Patrick have been talking about this week, last week. What are some things that you're thinking about? And you mentioned even talking to some banks and getting quotes on some services and products. So tell me a little bit about what's been going on in your world in ALX and Silverton, which is a private lending arm of ALX, and catch all our listeners up so that we can get back into this year full speed ahead.
Yeah, we're excited to be back. Excited to see what 2025 holds. New administration has brought a lot of, I think, good things. DOGE being one of them, like you mentioned in the article that I wrote up last week. Just talking about if they can, rein in government spending, that means that the government can borrow less money, then the demand for the government issued debt goes up, and yields come in, which is just really beneficial for anybody in real estate that needs to borrow money. People that want to get mortgages included. So we're excited about some of those things. I think we're still in a wait and see. Unfortunately, there's a lot of policy that is not real clear yet. I think there's optimism around it, but then you've got a lot of people that just aren't sure how some of these things are going to play out. Tariffs being one of the bigger ones. Immigration policy. We're starting to see, but there's still a lot of things that are yet to be seen. So we're still excited. I think 2025 is great. Living in DFW makes everything better. It's just been such a strong market for so long, and we don't see that changing.
Amen.
But yeah, we're excited. I mean, we're seeing deals come through. We're talking to developers. We're talking to builders. People are, kind of getting back to work a little bit. Not that they stopped, but maybe slowed down a little bit. They're excited about what the future is going to bring, and they're kind of picking up pace a little bit. So, and debt is getting more affordable for us, which is great. We had to look at refinancing some of our portfolio, and Patrick and I we looked at a term sheet this morning, and it was good. I think, man, this is nice. Like for years, we should if you had to get something, you're trying to put something out for debt, brace for the worst. But now we're starting to see spreads come in. We've got yields that are falling. And as long as they're falling for the right reasons, inflation's coming down, they're going to issue less debt, things like that. We're not, if it falls because we're in a tough spot economically, we're looking at a recession or something, that's not always great, right? But it looks like they're falling for the right reasons for the time being. At least we hope, we think, and so debt's getting more affordable. So and mortgage rates are coming down. Anybody that's looking for a house right now knows that. If they're actively looking, they're excited about what rates are doing the last several days. So that's what we're seeing. We're seeing like kind of some green shoots here. Like there could be some good opportunities to find property and to develop it and to flip it. You mentioned our private arm. We're always looking for people that want to flip property, see if we can't come alongside them and finance those deals. So things are looking good. They're looking better than where we've been, and we're hopeful that it's gonna just keep moving up.
I love hearing that. It's so encouraging. It's like spring has arrived, and it's time.
Well, and the weather too. Goodness, like we own multifamily. We know that we own several apartments, and gosh, traffic was way down. You don't realize how much the weather affects real estate. Like really, I
Really?
mean,
Uh-huh.
from apartments, from people looking for homes, even on the retail side, like people stay home, and you don't always factor that in. But Patrick did a great study on, and I want him to talk about this on leasing traffic at the beginning of the year, and it's amazing. I mean, and it's all whether. I think you're also coming off a very expensive end of the year, right? You got Christmas and other things. The holiday
That's a good
season is
point.
expensive for everybody. But and then you get into the beginning of the year and everyone's kind of recovering, but you're also dealing with that cold weather. Patrick, you want to talk about that? Kind of what you learned?
Yeah, I mean, I looked at our portfolio. The fourth quarter in DFW was one of the strongest months of lease demand in a really long time. And
Interesting.
that really caught us up. That closed the gap between the new supply. And so what I think everyone expected is that traffic was going to continue at the beginning of this year. And we were hopeful that it would too. And it kind of didn't really materialize. And so I went back and looked at the number of leases we signed in January at the properties that we've had for multiple years, and able to compare them to past Januaries to see how the leasing compared. And what was surprising to find is that it was pretty static. Every January is fairly slow. We all know that that's a slow leasing season for the reasons that Josh has listed out. And I think the one other piece of that isn't necessarily like consumer behavior driven is that what my suspicion is, and we'll see how this plays out, is the fourth quarter leasing was so strong beyond what anyone expected. So did that kind of eat into early first quarter 2025 lease demand, almost kind of like a prepaid demand, where a lot of it happened in a flurry at the end of the year, and there's kind of a little gap, and we'll pick up momentum again, hopefully here in February. Traffic is starting to pick up across our properties, and so, but yeah, I mean, just thankful that we've got the internal data that we can kind of track to support what we're seeing, which is a great place to be.
Yeah, I love that. It feels like I was talking to somebody recently that, January is always this kind of like chaotic time, especially on an election year. Because you've got, like you said, like post, holiday blues in a sense, and people are kind of going through that period. But then with the election year, you've got a new administration coming and things are really unclear. And so by the end of February, you start to get a little bit more clarity, a little bit more traction. And so anyway, somebody told me that, totally unrelated, totally different industry. But I'm glad to see that might be the case for you guys, and especially for real estate in North Texas in general. So yeah, I'm encouraged to hear that, because I want business to pick up. I want things to be, more exciting. I want people to buy and sell homes and all of that, and just feel, I think, like have a positive sentiment. That's what I'm really excited about. And I think hopefully this spring will lead to that. So tell me a little bit more, what else you guys are thinking about in the next, couple of weeks, or, I know you've got more writing coming, and there's different articles that you guys are thinking through. Josh, you mentioned one in the Wall Street Journal that was talking about sentiment, I believe. And then I saw another one that was about credit card delinquencies, that they're rising a bit, but mostly for subprime borrowers and cardholders. So yeah, tell me a little bit more about some of your perspectives, some of the things you guys are talking about and seeing data on your side.
Sure. I think the consumer health is a big, potential issue. Having dealt with inflation for years now and wage growth not necessarily keeping up with inflation for a big part of the population, and we're starting to see the effects of that, especially in credit card delinquency, and I think overall foreclosures and things like that are starting to pick up a little bit. I don't know if that's necessarily something to be overly concerned about yet. I think we'll just have to kind of wait and see how that plays out. It does look like inflation is. I know we had a hot reading here recently on the CPI. We'll get the PCE on Friday and see. I think based on where the PPI was, and they can make a lot of inferences from it as far as where the PCE is going to land. And it looks like it's going to be favorable. So we're hoping to get some good news on Friday that inflation, I think they're thinking, is going to be right around 2.5. Both just at the normal reading and at the core. Is that right, Patrick? I think 2.5 or 2.6. Both are coming in right there, which I don't know, where was it last month? It was above that 2.8 maybe. So, I mean, we're making like some really good progress there. And that's what we need, right? We need everyone just to take a breath and just kind of hopefully, hey, and that doesn't mean prices are coming down, right? That just means they're not accelerating as fast as they were. So it still puts a lot of pressure and stress on, some of the lower income group, that for our economy to be successful, we really need them, to be spending and to be producing. And a lot of times I think they are producing, but like we said, if the wages aren't keeping up with the rate of price increases, and that can be a problem when you're operating, when your economy is, is consumer driven, and 70% of GDP is based on consumer spending. We need consumers to be strong. And the Trump administration, they know that, like, they got brilliant people surrounding them. I think they're trying to drive policy. Like, that's one reason, like the tax cuts, right? They're trying to put more money back into the private sector, and hopefully that increases production and allows private business owners to increase wages. So maybe you can fight on one end, you're fighting inflation on the supply side, and then you're also increasing demand by putting more money in people's pockets. So there's things that they're doing, right, that I think that they're hoping it will really help the situation. But it is something to keep an eye on. I think it's also, you got to be mindful of these things play out differently in different markets. Here in DFW, where we are in an expanding economy, there's a lot more opportunity. In other places that maybe are more stagnant, I think it becomes a more of a concern, right? If they're just already, there's limited opportunity, and then people start to peel back, then that's where you really, those places could really get hurt. But here we are, I think, seeing that we'll see if the tenant slowdown, or the home, like people looking for homes and stuff like that, if that continues, that's more seasonal. And if that picks up in the spring, then it'll kind of be like, that was, we thought that could be a factor, but turned out it wasn't. It's just time will tell. But we're certainly keeping an eye on that. How are consumers spending? How are tenants feeling? Are people out optimistically looking for homes? Things like that.
Yeah, it was good to actually get that consumer spending article about how the lower end of the demographic is not quite keeping up with spending, because that confirms a lot of what we've seen in our multifamily portfolio. A lot of our properties are kind of on the middle to lower end of the income spectrum. And there's been a noticeable increase, not necessarily in rent that goes unpaid and never is collected, but definitely in tenants paying more slowly, requesting more time during the month to hit another paycheck to be able to pay rent. And for a while, the last couple of months are kind of head scratching, like, why are we seeing this? But all the data says that that's not there. So it was good to get that article last week, kind of confirmed that what we're feeling and seeing on the ground is what's starting to show up in the numbers.
Interesting. What comes to mind, I feel like I resonate in a small way. What comes to mind is I'm having a baby in June, and I have a new daycare bill coming in September, and I'm going to be paying $3,000 a month in daycare. And I'm just thinking, like, what am I going to have to give up in my budget to, like, make that happen? But yeah, I mean, I'm sure, especially on the lower income side, people are working multiple jobs, have kids, and, they're just trying to make ends meet. And if things keep rising, that causes a real problem. So yeah, I'm hoping that the way you guys are kind of talking about what this spring may be shaping up, that it'll kind of turn a corner and feel a lot more positive for a lot more people.
On a positive note, I think that what we're seeing in talking to a lot of home builders, especially in the preferred markets where we know really well and know a lot of the builders and want to be in with them, I think they're feeling good, and they're all looking for land opportunities, and that's still a competitive market. So I think that sentiment's there, and that puts you kind of 12 to 18 months out from finished product there. So I think, looking out into the future, that's really optimistic in the single family home world.
Yeah, we still have a shortage, right? We need more housing at all levels. So, and people are resilient, especially in the development community. And, uh, prices will, react based on demand. But I think as long as we've got people that need homes, you know, developers and builders are going to continue to build. It's going to be, uh, potentially more prohibitive, right? If rates stay up, it's going to be harder. And that affects everybody on the price all the way down to the end user until, but we are seeing though that people are like it's moving more into a buyer's market. So people are pushing back a little bit more on prices. We're seeing more houses that are existing homes that are put on market are sitting longer. We're seeing prices. I think that the median price is still going up, but we're seeing a lot of times more people at listing having to reduce their price. They're having to sit longer. They're much more open to negotiation. So buyers are becoming more powerful in the process. Whereas for years, sellers they called the shots, because for a while, prices, we still had the shortage, and then you had such attractive financing that you had so many people wanting to buy and not enough homes, and so sellers could kind of dictate terms. We're seeing that change, but we are seeing people are set up. There's so many people in the business and development communities that are set up to build and develop, and they're going to continue to do so. And as long as we have a shortage, I mean, they've got reason to do it. We would like to see a little bit of we would like to see improvement, right, on interest rates for them, especially on development costs. But we think that's coming. But like Patrick said, we work with builders and developers all the time, and we're working with one now. I mean, people need lots. They want lots. They're optimistic about being able to sell their product, whether it's to a build to suit or if it's a spec. I mean, either way, they're seeing that it makes sense for them to continue building. So as long as we've got the shortage, I mean, I think we're going to be, activity is going to be up. It just may mean that we don't see quite as high price appreciation for the end product. And we go into a more normal cycle where it takes 45 to 60 days to sell a home. We're used to taking 30 to 45 days for a long time. And a couple of years ago, it was faster than that. You could sell a home, maybe 30 days. It's like, well, what's wrong with the house? Mm-hmm. But that, people forget in a normal market, it's 45 days, it's 60 days to sell a home. And we're probably just moving more into that space, what it's always been.
Yeah, I did see an article, I think it was in the Wall Street Journal, talking about it as becoming more of a buyer's market. So yeah,
it's still, I would say, like for equilibrium, you want 6 months of supply, 6 months of supply, okay. And we're now at like 4. So it's still, it's kind of just becoming more balanced, I would say, because sellers are still able to get great prices, but they're now more willing to negotiate.
Yeah, interesting. I'm glad you mentioned talking about the shortage and the supply and all that, because that has become something of a kind of a driving point for you guys and your creativity with your firm and where you're trying to go. Because we've talked a lot over the last several weeks and months about Silverton Capital, which is the private lending arm that you guys have worked together on for developers, builders, flippers. And I wanted to just read a section of some of the website and the kind of the new message and the way that you guys are kind of presenting Silverton, because I think it's a really beautiful kind of passion that you guys have for this market to do something about the shortage in the housing supply, especially in the North Texas area. So I just wanted to read this really quick. So the on the headline of the site, we say, "Get capital that backs your build." Silverton Capital is a Texas-based real estate lender that has a passion for what you're building. We're borrowers who became lenders. If you're developing, building, or flipping and want a team that stood in your booth, let's get to work. And then you've got this great section about that entrepreneurial spirit of what it takes to be, a broker, banker, developer. You say the big dreams, the sleepless nights, the go-getter attitudes, the taking ground to grow and develop themselves and their teams to make a difference. We know the entrepreneurial spirit required to develop, buy, sell, and flip homes. which often comes at a great personal expense. As borrowers, we're using our capital and expertise to revitalize the housing stock. Now we've become lenders who specialize in networking, underwriting, and loan service to improve Texas one home at a time. We care about the housing shortage affecting those who live and those who want to live in our great state. It's a problem we know we can help solve. But more than that, we're passionate about the people on the ground, the builders driving nails and climbing roofs and repairing leaking pipes at 6 a.m. on a Saturday, the ones bearing risk with their hard-earned dollars to purchase or develop tracts of land, the flippers working nights and weekends beyond their day jobs to make a better life for themselves and their families. We want to help them get there. That's why we join with our borrowers to help them succeed. In addition to investing capital, we help guide, direct, and support our builders to ensure we have successful projects and investments. We open up our database and networks to make introductions and connect to others in the area. In other words, we're their team they can depend on to get the job done. We're Silverton Capital, the team real estate workers can build on. So I just love that kind of image that you guys are painting. And I'd love for y'all to talk real briefly about Silverton and what you guys are hoping to, where that passion came from and the mission behind Silverton, but then what you guys are hoping to accomplish with that venture, in the coming weeks and months.
We, just with our background, we're entrepreneurial. That's all I've ever known, really. It was a brief stint at working a corporate job, and then started flipping houses, 15 years ago. So I've always, even before that though, in school, always had an interest in entrepreneurship and owning your own business. And it sounds very glamorous, right? When you're, especially before you really know anything about it, just in theory, sounds great. And it did for me, and it's alluring, but then you get into it and you realize it's got its highs and lows, right? I mean, it's a balance, and there's days that you show up to the office and, you're excited and you're pumped up and you're passionate and you're ready to go, and you're just really feeling great about what you're doing and what you're and the prospects. And there's days when you show up to the office and you have no idea what to do, or you have no idea where what you need is going to come from, where it's going to come from. And you honestly, I mean, as a grown man, you break down, you want to cry. I have no answers. But one thing you have to maintain is that resiliency. You have to know that you were called into the position that you're in, that there's purpose in it, that there's a plan in it, that the suffering that you endure is more about growth and development, and that you will get through. And then you get through and then you celebrate and you have another victory and you forget all that. This is the best, and this is all I want to do. And now I'm thinking about growth again and development again, and where can we take this thing? And then inevitably you come to another struggle, and you're back on your knees, praying like, God, I believe you called me here right now. I have no idea what to do with this. And so having, experienced that, I feel a connection to others that are experiencing that too. And I know that it's all entrepreneurs, no matter how successful they are, they've gone through it at some point, maybe long ago, or maybe recently, or maybe they've gone through it several times. You talk to a lot of successful people that, went up and down for years. But the entrepreneurs that we're closest to are in the real estate world, right? We're talking about flippers and developers and home builders and brokers. I mean, real estate agents are entrepreneurs. I don't know if people understand that. They work for themselves. But that's who mortgage brokers. I mean, most of the people that we deal with work for they run their own book of business. Now they may not have their own entity, whatever, but they're kind of working for themselves. And so we have an appreciation for what the people around us and the people in our sphere are dealing with and going through. And we've come to really appreciate it, right? But we've come to really respect them, I guess, is what I'm going to say. Respect and admire them for it, and we want to be a part of helping other people succeed. So, when I go buy a house and I see these guys because we've been there, but are taking the risk to go out and look at an old dilapidated house and thinking, I'm gonna put my personal credit on the line. I'm going to put my personal finances on the line. I'm going to put my time on the line, and I'm going to go out and I'm going to demo this and rebuild this home. that to us is something special. That's a certain type of guy or girl that with a character and a work ethic and just a determination and a resiliency that we just so appreciate and want to be a part of. Those are the people that we want to build community with. So we want them to know, like, hey, yeah, we're running a lending business. We want to come alongside you, and we want to help you get your project done practically, right? You need funds. We have funds. Let's work together. Let's help you get it done. We grow both our businesses in the process. But in addition to that, we want to be here for you to help you with the challenges that you're going to face, whether it's on-site or job challenges, or if it's just like, I'm going through a rough time, I'm going through a struggle, been there. So, we can come alongside you and help you get through that, help guide through that to the best of our ability. But really, we just want to be a part of the community, and we want to serve. We feel like this is where we're called to serve and help. There's a housing shortage, so we know people need homes too. We want to be a part of that solution. We know that there's many ways to solve. They can fix homes, or you can develop new. We'd like to be a part of both. But we want to get in partnership with the people that are going to be on the ground actually delivering the product. And we know that from us, kind of on a transactional guidance, capital, like financing side, that's where we fit in. That's where our God-given skills are. And we have so much appreciation for the people that have skills on the operational side. And we want to find those people, and we want to help them and work with them. And we want to promote that entrepreneurial spirit. And also just be a support and a guide, and provide practical support and solutions when they need it. A lot of times they won't, right? A lot of times these people are way further than we are, and they don't need our help. But we want them to still know that we're there. We're not just your typical lender that's going to show up at closing and then at payoff and make sure you're paying every month. We'd like to be involved a little bit more than that. And that's what we're trying to build.
I love that. I think it's such a beautiful vision. It's so powerful, and it's so needed. I mean, talk about the housing shortage and prices and, low income, especially that segment of the American population having a hard time. Like, this is key to building wealth, to getting your life in order, is having a home. And so it's such a beautiful, powerful message. So I'm excited for you guys this spring as things keep moving up. I'm excited about Silverton Capital and what you guys are working on with ALX in general. And so we are restarting this podcast back up for 2025. So we'll be with you every week. Please subscribe to the newsletter at alxrealestate.com, and look forward to Josh and Patrick's insights weekly, and then our podcast weekly, and we'll keep moving. So Josh, Patrick, thank you so much both for being here, and I'm excited to talk to you guys again. We'll see you soon.
See you, Brandon.